Benjamin here. Yes, we are back here with another video. So today guys, we are going to talk about the mistakes that traders make. I once did a video like this about 2 or 3 years ago. So this one, it's perhaps like a continuation of that previous video and that we did like some time ago. So you can watch this one and also go back here on our channel and watch the previous one. So some of the things that I'm going to say here are my own life experiences when it comes to trading. And some of the things that I'm going to talk about here are the things that I see from other people, because sometimes I do mentor and coach people how to invest. I do mentor and coach people on how to trade themselves. So guys, I hope you're going to enjoy this video. Also guys, remember to like, to comment, share, and also to subscribe and on our YouTube channel, and also click that ring button so that you know when you upload a new video you will be getting it first hand. So let us jump on it now. So before we move even forward, let us read our risk disclaimer right there. So trading safety products involve a significant level of loss. So any portion or a loss or winnings that are made directly or indirectly from the information that you see from this video, Stocks for Hope and me myself Small Lamin will not be liable for any losses or profits made. So it's important that people, they do not trade money they cannot afford to lose. So these videos are mainly for educational purposes, not investment or trading advice. So that is just our disclaimer, guys. Let us move forward. So our word of thought here for today is that learning is the only thing that the mind never exhausts, never fears, and never regrets. So when you are learning, your mind never gets exhausted. When you are learning something, your mind never gets fearful. When you are learning something, your mind never regrets learning that particular thing. So this is a quote from a famous author, Leonardo da Vinci. So Leonardo da Vinci invented a lot of things back in the day. He drew a lot of things back in the day. Some of the things that are still used in our modern history and also in our modern day. Yes. So if we move forward now, so the first thing or the first mistake that people do when trading is that it's the failure or the fear to cut their losses. People do not cut their losses. You can find the person holding a $400 loss on his trade. You can find the person holding a $300 loss on his trade. So people, they can stay even days, even weeks with that particular loss without cutting it and just accepting that, okay, I made a loss, and then they move forward. So if you cut your losses, your losses, it's much more easier emotionally to take that thing and then move forward. But no one wants to buy and close at a loss, or a loss is an admission that you made a mistake. So people don't want to to admit that they made a mistake. So cutting your losses can still be fit enough for both financial reasons and also mentally to invest the next day. So it's important, guys, that's okay. If this trade you says that's okay, it's never gonna come back. Cut your losses so that you will have an account to come back and play the market the next day. So the next one is that taking profits too early. So people tend to see the market moving higher, and then they just see money in their account, and then they just close without letting that winner run. But you can only to find them that they can hold a loss for a couple of days, but they cannot hold a winning trade for a couple of days. Why? Because of fear of losing that money that they already made. So there's a fear of giving back to the markets, closing a winning trade early instead of waiting for an exiting signal, because you had an entry signal, right? But you need to find also an exit signal. When will you exit the market? So that's another mistake that people make. So let's move on to number 3. So the third one is not focusing on your strengths. So as a person, you should have a plan, and then that plan, it should be focused on your strengths. So it should be strength based. So a common mistake and most experienced traders make is trading outside their comfort zone. I often see young traders have little success in trading or buying JSE listed companies, and then decide they can also trade the Nasdaq 100 futures. Remember, guys, JSE listed companies, they move or modest. Their risk is pretty much modest. As much as there is risk, but the risk is pretty much modest. But if you are moving from buying a single particular share on a JSE, and then you want to go and trade the Nasdaq 100 futures, definitely it's not going to end well. So stick to something that you know and try to master the thing. You will make money doing the thing, because if you can trade the JSE listed companies successfully, you will make money out of the thing. Don't just jump from one thing and move to another thing. So people, they do not focus on their strengths. They do not focus on which particular assets class they are strengthful, or they are more they can do more research on. So it's important that not to jump around on asset classes. So number 4, people tend to do analysis paralysis. So when I say analysis paralysis, so they use many strategies. So what I'm saying is that stop using many strategies, or to learn everything at once. Don't try to learn everything at once. Don't try to use any strategy that you see and try to apply it in your analysis. It won't work, because those things, they will paralyze your risk management. They will paralyze even you yourself, not knowing what to do next, because you have all these strategies that you've learned on the internet. You have all these strategies that you see on friends. You have all the strategies that you see on social media. But at the end of the day, all those things, they end up paralyzing you. So you do not need to know everything in the market to make money. You just need to be good at one thing. You just need to be good at one thing and accelerate on the thing. Just be good on that one particular thing and then accelerate on the thing. You do not need to learn everything all at once. That's why you get frustrated like this gent over here, because people, they try to learn everything. So if you move on to the 5th one, the people micromanage their trades. When I say they micromanage their trades, every 30 minutes, every 15 minutes, they are peeping on their MT4 platform. They're opening their MT4 like they are checking WhatsApp. They're opening their MT4 like they are checking their status on Facebook. So people, they always micromanage their trade. Then they end up seeing things that are not there. So then they end up exiting positions that are supposed to be running. Then they end up taking trades that are not even there, because like they keep on looking at the market. Oh, okay, every 30 minutes, let me just see what the market has done. Every 15 minutes, let me just see what the market has done. So this is also micromanaging your trade. So you should always manage your trades on the time frame that you placed them in. The minute you change your time frame and you're looking at the news, or ask someone else to start, and you ask someone else, you start doubting your analysis. So let your trades breathe and give them room to breathe. So if you made a loss, admit that you made a loss and then move forward. But stop micromanaging your trade, guys. So number 6, do not be a signal. Do not be a signal this word pitch. Do not be a signal pitch. So you have someone having free 23 Telegram channels, né? And they have 5 paid channels. They are trying to follow all these things, né, at the same time. They're trying to follow all these things at the same time, and then they want to make a trade based on what other people are saying. Né? You have 5 paid channels. Né? Trader 1, trader number 2, and trader number 3, they are telling you to sell a particular asset. Né? After you sold it, and then trader number 6 or trader number 5 comes in and tells you to buy that particular asset. Now you are in a position that you are not sure of, because 3 of those traders that you have paid signals for, they told you to sell, né? And then the 5th trader tells you to buy, and now you are doubting everybody that told you or everybody that sent that analysis. Né? Just have this one mentor that fits your risk description, né? And just have this one mentor that is still in your level of wanting to know things. Just have this one mentor who still has time for his students. Just have that one mentor who still has time to maybe to post analysis on their social media, or still make efforts to make trading work for everybody. So it's easier that you get more understanding when it comes to trading. So you only find out that people, they are not making any money from any of these except being confused, because people, they have 5 paid channels and they have 23 free signal channels. So you're becoming a signal bitch by day. So yeah. Let us move on to the next one now. Number 7 is lack of preparation. So lack of preparation is also a mistake. Lack of preparation is also a mistake, not a small mistake, a huge mistake, because when a doctor goes to surgery to operate on a patient, they practice that procedure for about maybe a number of days before the procedure actually happens, so that they make sure that no mistake happens during that procedure. If a mistake happens during the procedure, they have a backup plan in place in order to rectify that particular mistake. So people, when it comes to trading, they do not keep records. They do not have journals. They do not have notebooks, or keep their notes. They do not have timing. They do not scale their lot size or position size. If you find a person, the previous trade, he had like 0.01 lot size. The next trade, he thinks he's going to make money on that following trade. He increases his lot size. Instead of making money, he loses his whole account, because they do not prepare any of their trading. So it's important that you prepare your trades, and also make sure that you manage your riskiness. So professional traders constantly focus on the small things and study their craft and look for an additional edge to make their trading better. So professionals, they study their craft every now and then and make sure that they find their edge to make their trading even better. So the next one is miscalculating the balance between risk and reward. Most people tend to miscalculate the balance between what they made in the market and what they lost in the market there. So risking too much capital in a single trade does not guarantee huge returns. So the thing that could happen otherwise is that you could be disappointed instead of making money. So not having a trade targets, daily, weekly, or monthly targets, or even no PIP or no PIP value targets, people don't even have a profit target, how much they want to make on the particular trade, how much they want to make on the particular day, how much they want to make on the particular week. They just trade blind and just hoping that they will make money on the particular trade. So miscalculating the balance between risk and reward. So you find the person starting with the week with a 500 US dollar account, but also ending the week with the 540 US dollar account, but only to find that his drawdown during that course of this week was 160 US dollars. He recovered the 160 and also profited the $40, of which, imagine if he didn't recover, he would have been down 160 US dollars. So people should know that risk is very, very important when it comes to the game of trading and also the markets as a whole. So number 8 is patience. So patience is a useful trait in trading, but most of us do not have the time, or do not have it. They do not have patience. Most people do not have patience. People are not patient when it comes to trading. We want constant access to the market. We want constant access to the market. We keep on checking the markets every now and then. And we find excuses to place a trade. So we place random trades. And also, the minute you place random trades, you have no trading plan. You play, after having no trading plan, you just place on a random market. Remember what we said earlier on? We said that a guy can come from trading a particular stock on a JSE, and then that guy jumps from trading that stock. He sees someone on social media trading the Nasdaq 100 futures. They also want to trade the Nasdaq 100 futures, only to find that that guy was pretty much good in trading stocks. His portfolio was actually doing great, but now he's frustrated because he wants to make money. He wants to trade the Nasdaq 100. He wiped out all his winnings there in the portfolio. So guys, it's important that you be patient. Even the guys that work at large institutions, they are always patient, waiting for other block levels, waiting for the market to come to that level to execute their trading. So it's important. So number 10 is mindset. So our mindset is important when it comes to this game. So when I say mindset, it also involves these two emotions there, which is fear and greed. So fear and greed are the two emotions that drive sentiment in the market. So understanding this can give you discipline and objectivity needed to take advantage of other emotions. So if you understand greed and fear, you will overcome some of the things that you need to know in the markets. But what I always say, this is just only my own thing, that it's better to be fearful in the markets than to be greedy. Because when you are fearful, you might actually be protected, and then your capital is not at risk. You can come back and play the market the next day. But when you are greedy, you can make money, of course, but your greed will probably be too big or too good for you, and then you will start be losing money there in the market. So overcoming fear, you can also, understanding fear, you can overcome greediness. So you can be disciplined, and also you can overcome those things. So the last one, that's a mistake that people they do, is people are jealous. People have umona. NgesiZulu sithi umona. So umona is jealousy. So why am I saying this is another mistake people that they do? Jealousy, I think, is part of an emotion. It's a human emotion. It's above greed. So there's fear, and then there's greed, and then there's jealousy. So yeah. So if you see another trader being successful, clap for that person, because that person, they are doing good. Clap for that person. If you are close to that person enough, ask them for help. If that person gives you help, make sure that you pay that person back. Make sure that you compensate that person, maybe even in other ways. Some people, they don't even say thank you after you have helped them. So this mistake of umona, of jealousy, that's happening around traders It's not just here in South Africa, it happens around the world. So when it comes to greed, I don't know, when it comes to umona and jealousy, traders are the most people that hate each other around the world, rather than they should be working together, because we are fighting in the same pots. We are all wanting to make money from the same pots. We all wanting to make money from the same pots, and that pot is so big for any of us. The forex market on its own, 5.4 trillion US dollars a day. That is just bigger than 7 Atlantic Oceans. Everybody can eat from that pot. So by helping each other, we can succeed in this game of trading, and stop bashing and stop trolling each other. So guys, these are the top things that I've seen also myself that people do in the markets. So I hope you guys are going to enjoy this video. Please subscribe, please share, and also comment on our videos, guys, and also like our videos and click on that bell so that you will get first access when we post other videos. So you can follow us on social media, guys, for more analysis and charts. On TradingView, it's Dlamini. Then on Facebook, it's Stocks for Hope, and then I do have another Facebook page, which is Dlamini. Then on Twitter, our business handle is Stocks for Hope, and then my personal Twitter there, it is at Stocks for Hope. So thank you, guys. Please share this video. I will definitely see you and check you out on our next video. Thank you and goodbye.